All right, let's dive into the 2025 results for Yunnan Energy International. Now, if you just glance at the numbers, you might think it looks pretty rough. But if you dig just a little deeper, you'll see a company that's making a really bold pivot towards the future. So, let's break down what's really going on behind the numbers.
First things first, we've got to look at the headline story. And, there's just no way to sugarcoat it. The top line numbers for 2025 were tough. This is what grabbed everyone's attention right out of the game.
So, the big one is a nearly 32% drop in year-over-year revenue. We're talking about a fall from around 577 million Hong Kong dollars in 2024 all the way down to just under 393 million in 2025. That is a major hit, and it immediately makes you ask, what on earth happened?
And a revenue drop like that, well, it's going to hit the bottom line, and it hit it hard. The company completely swung from a small profit in 2024 to a net loss of almost $900,000 in 2025. So, the big question is, what exactly went wrong here? To figure that out, we have to look at how the company actually makes its money. It really all comes down to two very different parts of their business, and this is where the story starts to get pretty interesting. So here's the breakdown, and it tells you pretty much everything you need to know. The supply chain segment, which is basically their commodities trading arm, is the absolute engine of the company. It makes up a massive 87% of all their revenue. That means that smaller distribution business makes up the rest. So as you can see, the way the supply chain goes, so goes the company. And here it is, the core of the problem. That huge supply chain business saw its revenue just plummet by over 35%. This happened for a couple of key reasons. First, demand for some of their agricultural products just dropped off. And at the same time, the company got smarter and deliberately tightened its own risk controls, which meant they scaled back on trading certain things, probably to protect their profit margins.
Okay, but those big, scary headline numbers, they don't tell the whole story. If you look a little bit closer, you'll see that despite all the challenges with revenue, there were some really positive signs of operational strength, and some smart strategic thinking.
Now this is a key detail, and it's super easy to miss. The company's gross profit margin actually went up. So what does that mean? Well, in simple terms, even though they sold less stuff, they made more profit on every single dollar of sales they did make. That's a fantastic sign of efficiency, especially when things are tough.
And hey, remember that smaller 13% slice of the business? Well, it was an absolute rock. The distribution segment, the part that sells analytical instruments and things like that, brought in almost the exact same amount of money as last year. It provided this steady, reliable foundation while the main business was going through all that turbulence. And this is where the story really pivots to the future. The company isn't just sitting around trying to fix its old business. Nope, it's making a very clear, very strategic move into a whole new sector: green energy.
And listen, this isn't just some idea on a whiteboard. It's a real operating project. They've bought a piece of Diao Green Energy, which is a massive new energy storage facility. It's a completely different business model for them. They make money by leasing out capacity and selling stored electricity.
And the best part? It's already working. I mean, it's really working. In its first year, this new green energy venture generated almost 58 million RMB in net profit. This single investment is already a powerful new source of income for them.
So, how does all of this fit into their game plan for a comeback? Well, Yunnan has laid out a very clear strategy for 2026 and beyond, and it's pretty compelling.
For their core supply chain business, it's basically a three-pronged attack. First, they want to lock in stable, long-term supply deals to cut down on all that volatility. Second, they're pushing hard into international markets. They've already run successful trials. And third, they're looking to leverage the Belt and Road Initiative to build a real presence in Southeast Asia.
And they are absolutely putting their money where their mouth is. They've signed this massive deal to buy up to 172 million Hong Kong dollars worth of silicon materials every year for the next 2 years. This secures a stable supply of a really high-demand product for their expanded trading operations. That's a big move. So, what does this all mean for someone looking at this as an investment? Let's just boil it all down to the core tension at the heart of Yunnan Energy's story right now, which is this balancing act between the risks of today and the opportunities of tomorrow.
On the risk side of the ledger, you just can't ignore their heavy reliance on that volatile supply chain business. Then there's the high customer concentration. Just 3 customers made up over a third of all their revenue. Yikes. And a 45% jump in trade receivables, which just means they're waiting longer for customers to pay their bills. That's a potential cash flow issue you've got to watch.
But then, on the opportunity side, that pivot to green energy is a huge deal. They've got that stable distribution business acting as a safety net, and their plans for international growth are real and already happening.
So what you have with Yunnan Energy International is a company that's clearly at a crossroads. Its traditional business is facing some serious headwinds, for sure, but its new ventures are showing incredible promise.
Which, leaves us with the critical question that every single investor has to answer for themselves. Is this bold strategic pivot into the green energy sector enough to transform the company's future and outweigh the very real risks that still exist in its core business? The answer to that is going to define their next chapter.
This content is intended to serve strictly and only as an informational, independent, objective summary of recent events and should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.